So this is all, but then which just checking. Hello, checking. Good. Hello. Good evening. Yeah, happy to see you, everyone in the room. We are privileged to be here and with you this evening, and everyone feel welcome. And those following us even on live stream, we are happy to be here. Let's conversate. So my name is Emmanuel Ahabwe, and I work for BRD, coordinator of the Housing Finance Project, and I'm privileged to moderate and guide discussion this evening. So with me, I'm with one gentleman and two ladies, whom I would like first give a chance to introduce themselves, then before we dive deep into our discussion. At least with them introduced, then everyone feel welcomed and ready to participate and enjoy the discussion. So let me begin from the first one.
Thank you. I'm Nelson Mandela from BRD, in charge of housing and infrastructure. Pleasure to be part of this conversation. Thank you.
Nice having you, Nelson.
Thank you.
Next.
Hi everyone, I'm Angela Mtamba. I work with One Acre Fund Rwanda. I'm one of the beneficiaries of the Giriwawe house. Thank you.
Hey everyone, hi, my name is Pepita Uineza. I actually work here in the house for a tech startup called Pesa Choice. I lead growth and partnerships, and I will be the youth today.
Yeah. Thank you so much, everyone, for that kind of round introduction. And so today we want to talk about home ownership, most especially with youth. But of course, there are different definitions of youth, young person, but I feel everyone in the house and anyone joining feel youth today. They normally say age is just a number, right? So age is a number, but we're talking about ownership. There could be someone, again, in a certain different age category, but they don't own a house yet, or they don't own a home. So that shouldn't be really a big problem to our audience tonight. So, but with that, we just want to dig deep and discuss and see what are the struggles, what are the challenges, what are the solutions, the ways available, possible, the opportunities that people might not be knowing about, how the journey to home ownership. But you know, at times you want to struggle or you want to go for something that you really want or you really know and you have an idea of what you want it for. But then at times we have different ways of thinking or perceptions about certain topics or certain needs. And in this context, we just wanted to first understand, as Pepita rightly said, she's the youth tonight and she's representing the youth, the voice for the young people. But we want to know, what's the perception of the young people about home ownership or buying a house?
Sure. I think the current perception for young people here in Rwanda is that homeownership is a foreign concept for them, right? It's not something that's reachable. And I think it's a trend that we can actually explore throughout the world, all over the world. It's not just Rwanda that's is seeing this idea that homeownership is something unattainable. I think it's all over the world, right? More and more of the youth, whether it's young millennials or Gen Z, are saying that homeownership is something that they do not believe that they will be able to attain in their lifetime.
Wow. I tend to agree with you, and it could be, but maybe I'm still wondering, when I bring it to the Rwandan context or culture, could there be any societal norms or culture that affect or that brings us to that perception?
I don't think that for men there is a societal norm. I think for women there is, right? Oftentimes we hear young women say, hey, you know, I think I'd love to buy a home, but if I buy a home and I move into my home, there will be a negative perception of me culturally, right? People will have certain ideas of my lifestyle. And so you have cases where women shy away from, you know, being homeowners until they're well married and have kids. Or you have cases where young women have bought homes, have, you know, great plots of lands or, you know, great real estate, and their families or the, you know, the society pushes them to move into their husband's homes, even though they have actually the better real estate. Or sometimes they're pushed to even possibly sell their great piece of real estate in order to get a home with their husband, when actually the logical thing should be to move in where you already have a home, right? So I think society-wise, it affects women. I think there needs to be a change. There needs to be more, women need to be able to have more agency over their own lives, and to be able to have home ownership without the fear of having a negative image in society.
Wow. I don't know whether everyone really had ever thought of that, but it seems really there is a need of intervention on that to change that. But maybe
I think a lot of Gen Z and millennials do not think of homeownership simply because there isn't capital to even. And so they kind of shy away from buying a home. And so I think there needs to be. I think when you're talking about homeownership, you also need to talk about financial literacy. You need to talk about savings, working with the youth to create sustainable savings methods that help them own homeownership. I think there should also be maybe more of a push within banking and in regulations to possibly, if you have a good credit score, have access to better interest rates like you would in other markets. And so having, you know, pushing for having a better credit score could be a great incentive for the youth to think of buying money, for the youth to think of buying a home. So I think, yeah, I think it all comes to capital. It all comes down to money and whether or not people can even begin to afford to buying a home. I think it's funny when people say, when should you think of buying a home? But if you think about it, right, in the youth, oftentimes if you are the first person, you know, college graduate to get a job in your home, you oftentimes have to help your parents, help at home financially, help your siblings financially. You don't begin to think, even if you start to think about a home, it's you want to buy the home for your parents. You don't want to buy a home for you at first, right? So I think there needs to also be this push for young people to also think of themselves first. You know, I don't think you can pour from an empty cup. You first have to fill yourself up and then eventually be able to give back.
Well put. That's really well said. Thanks, Pepita. And you just talked about money and financial literacy. And at least with my little knowledge, I know that at least in terms of financing and access to housing, there is a phenomenon, a term that most people really don't understand. It's called mortgage financing. And it's in that case that we really have Nelson Mandela we really want us to help tonight to really help us understand what's mortgage financing and how does it work. So with someone who has that little money, as she said, how can that now be turned into housing? Over to you, Nelson.
Thank you. I would simply define a mortgage as a loan, usually granted for someone to acquire home, a property. May it be, in most cases, it can be commercial, but mostly residential. So I would say mortgage is simply a loan that is given by a financial service provider. It may be a bank, insurance companies, other financial institutions that do have a mortgage as a product. So it's simply financing that is acquired from a financial service provider to acquire a mortgage. So it's a distinct loan product. Maybe you allow me to give about 5 distinct features of a mortgage. So a mortgage is usually secured. It has to be collateralized. So it means once you are given a mortgage, it means that very same property has to be a collateral. Or in that sense, you don't have a collateral challenge to pledge to a financial service provider. Secondly, a mortgage has to be long-term in nature. If you are giving a loan of, let's say, 5 years, 7 years for someone to acquire a property, in most cases that can't qualify as a mortgage, because a mortgage is meant to give someone relief to over installments. So it has to be long-term in nature, between 15, 20, 25 years. In some markets can go even to 30 years. Glad that in our market it goes up to 25 years. So it must be long-term in nature so that it can give someone ability to raise money to service it over a certain period of time. So another distinct feature that I would mention in that case would be it is either pre-financed or refinanced. So meaning you can acquire a mortgage when you want to do a new construction. You can also acquire a mortgage when you have an existing mortgage somewhere that is burdening you, either because of bad terms, being short-term, being on a high interest rate, so you can get it financed. So a mortgage can be either through a fresh construction or having an existing mortgage that you want to refinance on some relatively good terms. So another feature would be the higher loan-to-value ratio. So meaning the financial service provider can go up to about 100% financing you. In most other loan products, you find a financial service provider gives maybe 70%, 30% is your own deposit or contribution. But when it comes to a mortgage, financial service providers usually go up to 100% to make it easy. I would say it has quite distinct forms and features because owning a house is a lifetime achievement. It's an emotional product, literally. Thank you.
Thank you, Nelson, for educating us tonight on what mortgage is, and I think maybe we shall later hear from the audience whether they've really understood it or whether they have even more clarifying questions about it. And as you mentioned, among its property, but again, like even in Rwanda, I think I came across a directive from the central bank, even asking banks, like if somebody, mostly if it's a first property, so by regulation, even giving 100% of a loan for a mortgage, it's okay, and it's allowed. But then the way you describe it, somebody will wonder then, why is it not being, utilized? Because when you look at how the mortgage uptake in Rwanda, it's less. So is it because people don't know it, or there are challenges that are facing the mortgage industry in Rwanda? So could you shed more light on that as well?
Thank you. Maybe before alluding to your second question, another distinct feature that maybe I forgot to mention was about the interest rate. A mortgage has to relatively have a lower interest rate. One, because it's long-term, it's secured. There is literally a low risk profile with a mortgage because it's secured, and in most cases secured over the loan given by financial service provider. Meaning if you acquire a loan of a house set of 50 million, for the sake of an example, its value in the next 2 months can be more than 50 million. So it means the bank is adequately covered, so which implies a low risk profile, and in most cases it has a low interest rate. So on your second question about why is the mortgage finance a challenge? One, I would say there are literally 3 challenges around mortgage finance. especially with the market. One is, like I mentioned in the features of a mortgage loan, it has to be long-term in nature. And so meaning there should be long-term funding base in the economy. So you find most banks rely on short-term deposits. Short-term deposits meaning deposits that they use to do their normal lending operations. They span, let's say, to a year. So meaning if you have funding over here, it's literally not impossible to extend mortgages over a period of 15 years. So there is a challenge of long-term funds in the market. This is mainly driven by our raw saving base. The saving culture is still a problem in the country. You find economic-wise, they say that you should save first, and then what is left is consumed. From those that are familiar with the marginal propensity to consume and to save. So, but it's a different context in a country or in Africa as a whole. We consume and then save what is left. So there is little saving, so the economy has literally no long-term saving base. You find that banks use short-term funding to do their business. So meaning it's also hard for them to do mortgages. Secondly, even the short-term funding base in the economy is expensive. The few people with surplus funds to save, they are few, meaning there is huge demand and the supply of funds is limited. So meaning even the little funds in the market are expensive. So there is a problem of lack of long-term funds and lack of cheap funds because there are few suppliers of funds, which makes funds expensive on the market. Secondary is about low purchasing power. According to research, about 60% of the salaried formal workforce earn below 300. And for a mortgage to be affordable, in the best practice, you need to save, you need to contribute towards the mortgage about 30% of income. So with that earning base of the population of the clients on the market, it makes hard really to afford a mortgage. Secondly, one would say about when I say low purchasing power, it doesn't necessarily mean that you don't earn a lot, but you earn a lot, relatively a lot, that is committed. You find most graduates graduate with loans, student loans. Yes. So you graduate from school exactly with commitment. So low purchasing power is driven by earnings base, by commitments, by our obligations. We need to support our families. Like my colleague on the panel said, before thinking of your own house, you think of building for your own parents, guardians, brothers. So low purchasing power is mainly driven by a number of causes. Third is about literacy, financial literacy. When you think of a mortgage, you think of going to Chamunara. I just forgot the word. So to auction. So and forgetting that actually you are renting. If you don't have the money to rent, the property owner will take it back. So it's an issue of mindset. Whether you are renting, whether you are paying bank, you don't own a property. So there is an issue of mindset and lack of knowledge about how mortgage finance works, and that myth about mortgage. But we need to make it to understand it better. Though you are renting, though you are paying a bank, you don't own a property. And the good thing with having a mortgage is at least you are paying, but at the end you own it. Thank you.
Thank you so much, Nelson. I think those were really great explanations, and most of those are those challenges mentioned. Definitely, in one way or the other, maybe we might even have some people commenting on that and like what challenges encountered by themselves, but maybe kind of going back, and I was also wanted to hear from Angela about ownership. because yes, we've had those challenges, but still wanted to come back to know in an ideal situation, when should someone think about owning? You might also contribute to that. You know, Pepita mentioned about it and the youth perspective, but still you can also add on that, and then before I continue another round.
Thank you, Emmanuel. I think, as my colleague said, someone should think of owning a home when you have a salary or what to pay. You can't think of something you can't afford. When you were just asking my colleagues on the panel, I thought of when I started thinking to own a home. It was when after my college graduation. I immediately got a job, and I started thinking of how can I get somewhere to stay, and how can I get somewhere for my father to stay, because that is something I can't go back to narrate. But if we think of owning a home, it's a property like owning a car. When you have money, you can own a car. When you have money, as a youth, let me talk as a youth, you can still think of having a home. Money is something we need to save and own a home. Yeah.
Yes, money. So, but when you talk of money again, I think Pepita might help us on this. In the youth perspective, with that, we had what Nelson mentioned, but let's put it maybe in a way that everyone would understand. Can a youth really afford a house? If it was not about perception, so it might still link to the money, and you all touched on money, so that kind of affordability.
When you're saying can youth own a home, can they think of, can they afford to own a home? Your question is already alluding to money, right? So the question is, do we have enough employment for the youth? Are we offering them growth in their careers? Are we offering them incentives to buy homes? Are they able to earn more money year after year, right? The youth can only, if you're in a state of survival, I think you've touched on savings, Nelson. If you're in a state of survival, obviously you're going to spend your money and then try to save whatever is left, whatever is available after you've already done all your expenses. You can't afford to think of saving if you're living paycheck to paycheck. That's not a reality, right? So we need to actually address the actual issue. How can we make it so that the youth can begin to think of saving, can begin to start thinking of not living paycheck to paycheck? Is it possibly working with fintechs and developing tools that can help the youth save more efficiently, right? Is it tapping into tech and developing tools that can also help, for example, in the US you have a 401k, right? So it's like RSSB, right? Like pension. Can we possibly work with employers to also maybe try to have a fund that can go directly towards home ownership for the youth, right? I think you also need to create tools and incentives for the youth to also begin to think about home ownership. Right now, if you come to me as a youth and you're like, hey, why don't you own a home? I'll tell you, well, I'm broke. Okay, that's just the answer, right? I won't tell you that. It's like, why would I even think of buying a home? And so I think you need to really get to the core issue, and you need to actually address the actual problems that are happening within the youth before you can, tell them to own a home. I think, I understand that you want to come from the top level down, but it needs to go from ground level up. It needs to be a grassroots action for the youth to begin to start thinking about home ownership. Yeah.
Thank you so much. That's really, that's truth, and definitely, as you mentioned, it involves many stakeholders, many different stakeholders playing different roles. specifically with those that really begin from grassroots to address challenges. But as we are here tonight again, maybe this also takes me back to Nelson. Nelson from the Development Bank. What is the Development Bank doing to really, especially again going back to mortgages, because you've all alluded to money, but I think you talked about illiteracy and people not understanding, but could there be some interventions specifically targeting low, middle income earners? And in this category, normally we find the youth, as they all mentioned, that income is an issue. So what are the interventions that are in place for us?
Thank you very much, Emmanuel. I agree with you. The issue of housing is I would say, is an international phenomenon. So it's not in Rwanda alone. But alluding to your question is from the perspective of the Development Bank and in collaboration with other relevant stakeholders, the government, the financial institutions, and those other in the financial space, so in the housing ecosystem. So most of the interventions we've done are mostly around the challenges I elaborated earlier. So one was the issue to fix cheap and long-term funds in the market. So initially, when you engage the banks, why don't you do mortgages? Why is your mortgage book not growing in relation to other products you do? One of the challenges they were alluding to was about don't have long-term funds. And the little funds on the market are very expensive. So one intervention mechanism was to avail liquidity on the market that's cheap and long-term. So we have a fund of about $150 million that has been put in the market to allow banks to offer mortgages. So now they are in a better position to offer mortgages for about 25 years, which was not the case before. When you launch this product, most banks could do up to 10, 15. But we are glad that now banks can do up to 25 years. So the more they ask, more it becomes less burdening to mortgage beneficiaries. So these funds are also cheap in nature. So meaning the banks can get cheap funds that are long-term in nature to be able to do mortgages. And we've managed to bring interest rates down from about 16 to as low as 10 and 11%. So I would say we've not gone where we want. We would want to bring them to as low as 5%, extremely single digit in the low end, but the issue of money is about how you source money and how we price it. So the government is still doing a lot to bring the cost of funds down, but it's committed to bring it down from 16% that was before, now to about 10%. So another intervention that we do is one, there is the issue of affordability, but the issue of availability is also a problem. So we thought addressing one side of the pyramid or addressing one side of the ecosystem wasn't enough. Yes, there may be funds on the market that are cheap, but where are houses? So as a development bank, we've also tried to do some supply side interventions because you cannot bring down the cost of a house without bringing down the cost of finance to developers. So we've tried to avail funds through various channels you've heard of economic recovery funds. So it's a fund that also supports developers in the affordable housing segment. Has been, so we've been in the most recent 2 years, at least to match the cost of finance end users with the cost of financing for developers, so that we can in the end bring the cost of houses on the market relatively low. We haven't done a lot to bring, let's say, mortgage to about 5 million, but at least with the injection of the cheap and low-cost funds, even to the supply side of the market, we can see some progress. So on the issue of awareness, so on the issue of literacy, we've done awareness on the mortgage finance. So most people think that a mortgage is only for people with salaries, but not. Anyone with income that can be underwritten by a bank can access a mortgage. So let us be clear, a mortgage is not only meant for salaried employees. So the banks can also look at other alternative sources of income. They can look at your retail business, and when they establish that you portray the capacity to pay, you can have a mortgage. Also, maybe alluding to what she just said about tools on how people can save. So there's been lots of initiatives with even the banks. The banks now have saving products where someone can save a small portion that is left. There are also other avenues of escrow management. A developer can come, say I want, let's say, to put up 100 housing units and sell off plan. So there are arrangements where we can have escrow accounts that are strictly controlled, where the developer can have access to the funds, and then you could be able to save, let's say, about 30% of your cost, maybe in 2 years. So this is also one of the avenues you are putting in place to manage savings. Maybe if you contribute about 30% of a house, you can get a debt of 70%, and then easing the burden to repay. Thank you.
Thank you so much, Nelson. So, hearing of that, just before I open it up for the audience, I wanted to ask Angela. So, with all that said, can you still advise a young person to take a mortgage? And if yes, what are the benefits? Or if no, what are the losses? Or there, you can tell us more about that for you as you.
Thank you. As my colleague said, when you have money, you can get a mortgage. I'll go back to what he has just said. When there is financial literacy, I think youth can get a mortgage. I would say some of these available opportunities, we miss them because of not having information. I thank BLD that you are doing a lot to make people aware of these available opportunities to own a home when you are a youth. I think I got a benefit to know this program when I was still having little money, but with the financial literacy that I had got from different sources, I thought of owning a home through a mortgage, and I got the benefits. I come back to your question, the benefits or the losses. If you are in someone's house, you are renting, for example, for 5 years, even if you are renting for 100,000 Rwandan francs, still it is going to someone, it is not coming to your property. That is one of the loss. For me, I see it as, if you get the information, you should just think through what is the benefit, what is the loss. For me, I don't see it as a loss, getting a mortgage, but I see it as a benefit. Because that money I had to give the landlord for 5 years, I would have bought my own house. Actually, I'll say my own experience. I rented for 5 years. So 5 years, I never rented a house which was below 200,000 Rwandan francs. So can you count for me, if you have simple mathematics, 200,000 Rwandan francs for 5 years? If I paid that money to a bank, which we call lend to buy, and I got a mortgage, now I would be finishing to pay that mortgage. So for me, I see it as a loss when you don't get a mortgage. The fastest step when you get an income, be it a salary, be it another business, it is really a loss. It is like getting this mortgage is a long-term saving for you as a youth and your future family. We need, when we think of this, it's just financial literacy and to remove the misconceptions. Like when I started talking about the mortgage, most of my colleagues were like, oh, you're just going to go to auction. Why are you thinking of a mortgage and you are a woman? Why? I said, it is in Rwandan culture. I had to debate with my husband. My husband was like, no, we don't have to get a mortgage. And I was like, why? Why? See, we have been renting for 5 years. Think of that money. So actually, the losses are in. You don't save for your family. You don't even get good, like, home. You can even continue developing even when you are paying off the mortgage. The advantages are greater far away than the losses. Yeah, thank you.
Thank you so much. All in all, you have to stay somewhere, and the better if you're contributing to some property that might all end up being yours. So we've spoken much, but you have audience in the room, and wanted also to hear. It could be a question, it could be a compliment from what the speakers, my panelists have said, but you really want to leave the room when you understand this concept about mortgage, this housing finance, and we break up some cultures and some norms that hinder us from accessing these opportunities. So the floor is open for the audience. We really want to hear from you. Thank you. Do you have microphones? So maybe by show of hands, microphone can come closer to you, and then we hear your thoughts. I really encourage you to participate in this, as we are not only benefiting only us who are in the room, but the wider audience that is following us.
Thank you so much. My name is Bisa Habat. I'm a co-founder of Jengamo. Jengamo is a construction company that is making sure that low-income earners in Rwanda can own decent and affordable homes. When I was reading your brochure, somewhere you said the beneficiary of this loan are the ones to go find these houses. And you also say that you don't actually fund the construction, but the person has to purchase an already existing house, if I'm not mistaken. So my question is, yes, you mentioned that you do help developers to make sure that the construction is affordable and the house itself. So I would like to get you extrapolate more about how you work with developers to make these houses affordable. And somewhere you said you help them to build 100 houses plus. And I think some of the construction companies are not yet able to build such a big number of houses. So what do you think about some startups like mine that is involved into making these affordable houses, but it is not capable of building such a big number of houses? Thank you.
So we can take like a round of 5 questions, and then maybe address them, because I already saw some other 2 hands here.
Thank you so much. My name is Isaac Nambakumana. I am success and business coach. I help people to know how they can be able to make money. So I am glad to hear that this opportunity is here, that people can get that mortgage. So I asked myself, in getting that mortgage, if I am like a youth and I want to take that mortgage, but I wanted to lend it, I take it as mortgage, but I will lend it so that I can get money that will help me also to pay back So is it, what are the conditions that you give to the person who is going to take the mortgage? After getting that mortgage, I want to know some conditions that can go after that person who got that mortgage. Okay, that's my question. Thank you.
Well understood. Yeah, there are two more hands here.
Thank you. My name is Romeo. I'm here representing a company called Century Real Estate. The first one is, it's an appreciation. Thank you for this, and it was very interesting when I read that it's no longer a hindrance not owning land or a property to not qualify for affordable housing. And the other one is it's literally in regards to affordability. I believe it is relative, and what's affordable to me is not what affordable to Nelson, I would say. And that's where I believe the two is better than one concept. That's exactly when you get married. It's easier for you to get a mortgage than getting it when you're still a bachelor. And the other one, it's maybe a suggestion. I don't know whether it can be considered, but I think instead of looking at affordable sales, as in buying homes, purchases, if you can also consider affordable rentals, then I believe it's easier to guys like me. Affordable rentals will make more sense than affordable purchases for me to manage expectations and finances. And another one, it's if there will be a lease to own scheme where I will be leasing it with the end goal to own it, that is vis-a-vis to the interest being paid every now and then. We agree on a flat fee that I will be paying every month for that extended period of time, and I end up owning it. And the last two questions, Pepita mentioned of employment. Let's say I'm employed and I apply for the mortgage and I qualify. First year goes down, second year goes down, paying well, and something like COVID happens and I lose my job. How is such case treated? Lastly, it's specifically for Rwandans who have applied for study loans. How does it work if you still have an outstanding loan for your studies and now you want to go a bit higher, you go for a home? How is that treated as well? Thank you.
Thank you very much. First of all, I wanted to thank you for this beautiful event and also for the content. Emmanuel Akuri from Impact for Africa. I'm also the chairman of Green Tech Constructions, a construction company which does affordable housing in Gizosi. Just a quick question to Nelson. Do you support also your clients or the Rwandese citizens which are eligible to affordable housing in the due diligence process of the properties? Because obviously we do understand that real estate is a collateral which is going to be paid over here, but also has a depreciation, and different material depreciate differently. So this is a question just from a technical point of view. Thank you.
Let's first respond to those. Thanks so much. They are all great questions, and some are comments and recommendations. I think I will begin with Nelson to answer Herbert's question. Then, basically you might comment these most of these questions, and then those ones left we can also address to them.
Thank you very much, Emmanuel. It's clear that the issue is money. All the questions revolves around finance. Maybe alluding to Herbert's question about how do we support developers to bring the cost of houses, the ultimate cost of houses down, and his question about for startups. that don't have the financial muscle to start up with 100 housing units and maybe are able to start with 10, 15. How do we support them? So on the issue of how do we support clients to bring down their cost of houses, in the end, one is about the interest rate. I think I mentioned this. So we have various product lines and various concession funds that support affordable housing supply projects. So where you can be able to, we can be able to bring the cost of financing or the interest rate to as low as single digit. I won't say the interest rate because the interest rate is a combination of very many factors: the risk premium, the risk associated with the project, and there are very many dynamics that come into play. But at least we've managed to bring the cost of financing to as low as 13, 12. And for the developers in the affordable housing supply. So this is one avenue that we are tapping into in order to bring the cost of development itself down. Another avenue is through we work with the government, especially with the authority in charge of housing, Rwanda Housing Authority, to bring down the cost of housing through provision of infrastructure. It's ideal that infrastructure cost takes about 30% of a housing project. So once you qualify, there are certain requirements for you to qualify for infrastructure. That includes having the affordable units in your project to a number that is 40 on a hectare. So you are able to qualify for infrastructure support. So once you qualify for infrastructure support, so it means the cost related to infrastructure for your project is subsidized, is covered by the government. So which brings the ultimate cost of a house within the affordable thresholds. So the other question was about how do we support startups. So we are very open to incremental developments. You may have the idea of developing, let's say, 100 housing units, but you don't have the capacity to develop the 100 units at once. So we are open to development in phases. You may start with 10. You may do your project of 100 units, but phase it. So we are better aligned to finance phases. We can finance the first phase. Once the first phase is completed and sold, we'll unlock the second phase. So startups are welcome to BLD. I think those were the questions from Herbert. Yeah. The question of Isaac about getting a house through the mortgage schemes and affordable schemes and rent it. So here I will talk about two scenarios. One, developers who get support from the government, there are certain conditions that apply to restrict speculation, because at the end of the day we want to support people to own houses. It's not a business in that sense. So for developers that have incentives in form of infrastructure, in form of VAT exemptions, in form of other various forms of support, including even land. So there are certain restrictions on how long it can take for the beneficiaries of people in those projects to be allowed to sell. Rent can be allowed, but sale is prohibited for a number of years. I think that was the only question from Isaac. About Liumio, one was about affordability. Behind us, we are in agreement. Affordability is very relative, and that's why in most cases people wait until they get married so that they can leverage on a consolidated income from the spouse to afford a mortgage. I'm happy with his suggestions about the rent-own schemes, lease-to-own. So these are the areas we are actually trying to explore. We haven't done a lot in that area, but these are also other avenues we see that are going to contribute to the housing supply, not from the ownership perspective, but even from lease-to-own or even rent-to-own. So these are also avenues that we are trying to explore. There are no regulatory frameworks around that, but this is the way to go as part of our programs. Once you lose a job in the middle of, this is a tricky question. And but banks are considered in certain adverse situations like COVID. COVID has hit a number of people. Their source of revenue heavily affected. So there are certain considerations. So your loan may be restructured, be given, let's say, grace period, be given an extended repayment period. So I would say I don't have a straight answer to that, but there are certain considerations when your job is affected, specifically when it is due to some adverse situations that are known even to the bank. So there are certain considerations, but the comfort I would give you, the bank doesn't rush to auction, because auction is also expensive to a bank, and in most cases we don't even recover the value. So it's our last resort. So there are certain negotiations. We look at various options on how we can maintain the client and have and bring him back on track. Thank you.
So mentioned about if you still have a bursary loan, and so is it considered maybe by the credit bureau that you can't get another loan, a mortgage?
So when a bank is assessing your capacity to pay, they look at your gross revenues and net revenues and the capacity to pay, but they also consider commitments, be it contractual or non-contractual. So once you have a study loan, it's a contractual commitment, and when they look at your capacity to pay, this loan is also considered. So there are two avenues that may help you. One is to give you a long tenor. Maybe without a study loan, you may be able to afford a loan for 15 years, but with a study loan, you can afford it with 25 years. So we can stretch the repayment period. Also, in rare cases where someone could some upfront contribution, you may contribute to your property and then try to reduce the size of the debt in the whole equation. Thank you.
But the answer is it's okay. When you have a mortgage, a bursary loan, you can still take a mortgage, yes, as long as your income allows that. Yeah.
Even if you have other loans, personal, consumer loans, we just look at the capacity to pay and assess whether you could file for a mortgage from a repayment point of view.
But does it need to be the same bank?
No, it doesn't.
I can go to another bank.
Yes.
Okay, thank you. But maybe if we put the mic down, sorry, Emmanuel's question was directed to you about the support given to the beneficiaries in the registration process, I think.
So I would say we support our clients, be it through the off-takers whom we serve through commercial banks, and also developers that come directly to us. So we support them through due diligence. We've supported them through a number of areas, be it condominium processes, registration, and titling. So I would say we as a government bank, our mandate is not just to give debt, but to also do provide business advisor services, and also have technical assistance facilities, issues that require research, issues that require designs, so we can support our through technical assistance products. Thank you.
Okay, but so I think that round of questions went well. So, any more questions from the audience? Yes, I can see one hand on my left.
Thank you so much for a good presentation. My name is Karangwa Roger. I am an investor in real estate. I have one question. Considering too the growth of the city, even the growth of the country, like it is projected that in 2050 the population of Rwanda will be around 25 millions. So, and that's 2.5 decades away, and the maximum of this mortgage can go up to 20 years. So have you thought about how the city is growing and the type of units or houses that are going to be involved in this initiative? And for instance, those areas that are mapped as Amanegeka, or single units that probably in the future are not going to be favorable because of the growth of the city or the country's population. So have you ever thought about it, and what about that also, if the beneficiaries are not going to be forced to sell on a lower price, or be evicted also at some circumstances? Thank you.
Thank you so much. My name is Shema Olivier. My question goes to Angela Mtamba. I've been saying that when you have money, you can also have a mortgage. Yet the mortgage is also money. How is it different? My question number 2 goes to Nelson Mandela. Is it possible that someone who has maybe, let me say, zero income rate, or who doesn't any job or any small business to earn something, some little amount, is it possible that he or she can get a mortgage loan? Is it possible? Thank you.
Can take those. Can I begin with Angela for you to be breathing?
Thank you. As you asked, that a mortgage is money and money is mortgage. For me, from my perspective, I see it as money, because when I pay the landlord my 300,000 for maybe 2 years or 3 years, I'm not saving that money in my own property. But when I'm paying a bank a mortgage that is bought and it is in my names, and I know after maybe 5 or 20 years I'll own it, then I'm saving that money for my own facility. So that's why I'm like, I don't know if I will answer you well, but it's money you are saving. If you don't get it to that house, maybe it can be consumed in other ways. You can pay the landlord and don't, maybe, as we know the habit or the nature of the economy, we save after we've spent. So among the money I earn, maybe from other sources of income or from my salary, when I say I've paid this mortgage and it is my facility I'm staying in, then I'm having my money and I'm having the value for it after 20 years. I don't know if I've answered you, but that is what I can say. Thank you.
On the question of issues to do with how we project. Put in place. One, there is the land banking initiatives. So we've partnered with the government to do land banking initiatives where we can consolidate land and be able to set up projects where at least we are sure that in the next 10, 15, 20 years, they will be complying with the urbanization requirement of the country. So this is one area that we are exploring. We've mobilized over 50 hectares in Kigali, and these are initiatives where we believe we can venture into public-private partnership arrangements and work with developers to set up houses. So once these mega projects are set up, so we believe, one, there will be efficient use of land, issues to do with environment, issues to do with how we project the future will be taken into account. And also, when we are supporting these projects, we also put into account the master planning requirements, the building codes requirements. Yes, this is not 100% a guarantee that nothing is going to change, but we are more urbanization inclined other than supporting the self-construction. So we know the isolated self-construction are prone to these resettlements, expropriation. So we are more urbanization inclined as to support bigger projects where we can bring a number of people together, make use of our little land effective, and also bring people together where they can access basic infrastructure services. So regarding people in Amanegeka, there has been various initiatives to do resettlement projects, and a lot has not yet been done, but is also one of the government priorities to ensure that all people in the risk zone areas are resettled into proper shelters where all these issues are taken into account and are properly addressed. On the last question of whether someone with no income can get a mortgage loan, I would say no. But again, there are some other several avenues. You've heard of social clusters where the governments do integrated model villages. So these are the areas where these people are served, but through a financial institutions, only people with the capacity to pay can access mortgages, but this does not exclude people in the social cluster. So these are supported through other avenues of integrated model villages. You've seen very many projects launched in this arena, and we believe a lot should continue to be done also to cater for this needy segment of our population. Thank you.
We can talk and talk and talk. This is a very good subject, discussion that really touches everyone needs a home. We all stay somewhere. So normally it's something that we put on table and we can discuss and brainstorm, and I'm quite sure that there are different players and stakeholders that are following us that hear these different inputs and ideas that need to be considered from or tackled from different angles. I can see one more hand with a burning input, but I will consider that as the last one, and then we bring this to a close.
Good evening. My name is Ramba Method. We are a real estate developer. I would like to ask you if you can share some data, the typical house, the people on Iwawe that are requesting the 3-bedroom, what is the requestion? It will make our life easier to design the house for them. If you can share the data with us.
Thank you so much. I think the request is personal, and that's information that is available to help developers. And maybe, again, maybe to emphasize that one and for people in the room. So we have an online platform called giriwawe.brd.rwa, and it's a platform that people who need to access this scheme, especially as they introduce the subsidized interest rates for a mortgage, or they are looking for owning a house in an estate supported by the government, it's a must for you to apply through that system. I think it's, the website is well set on the brochures that are in the room, but you can also maybe share it for those following online. So that information is available. You can reach out to us, and we see exactly how you could get it and what you're required to just submit to access that one. But really want to take this time to appreciate the panelists. It is really interesting, and your insights, your thoughts were really great. I can see that at least from today, somebody who followed us, somebody who was here, at least there is a mind shift in terms of mortgage financing, in terms of understanding the concept. Maybe someone was new to hear about it today, but I really want to thank you so much, Pepita, for this time. I want to thank you, Angela, for really sharing that testimony and being vulnerable to really educate us on the journey of mortgage. And a big thanks to Nelson for really teaching us financing and mortgage and the banking industry in general. This has been really great. So
maybe one simple remark. Looking forward to an application. Over the weekend, Monday, let's do business.
Okay, so it's doing business. But on top of that, I really want to appreciate the audience. Thank you so much, those of you following us right here at Noskin and those following via the live stream. We really appreciate your time. And thank you for doing this because it helps. And let's keep coming and have such a conversations. Thank you so much and have a nice evening.
Thank you, thank you, thank you, thank you very much. Another hand clap for the panel. A proper hand clap, guys. It's the last Friday of the month. A proper hand clap. Aye, man. You see all those free drinks behind there? You're not going to get them if you don't clap properly. Welcome to Norskin. Welcome to Founders Friday, powered by BRD, Rottweiler, and Heineken. We're going to have a few more speakers. Thank you, Molly. Again, quick speeches founders telling us about what they're doing. It's not going to take more than 20 minutes. So please, once again, give us the attention. And without any further ado, before the DJ sets up, let's have Mr. Alex Kalanda to tell us about Ayambe Zero. A hand clap for Alex Kalanda. Stand here.
Hi everyone, can you hear me? Hello, 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 hello. At the back, can you hear me? Show of hands, the last person at the back, please. White cape. All right, my name is Alex Kalanda, and I'm the founder and CEO of Ayambe Zero. Quickly, maybe a few points about me. I went to civil engineering school, and while there, for me, I basically always loved to do entrepreneurship. So during the day, I'll go for my civil engineering classes, but in the evening, I'll teach myself how to code. So by 2018, I had pretty much ventured into AI and machine learning as well, and built a couple of applications. After spending a couple of few months at Stanford, I decided to come back to Rwanda and pretty much start off with Ayambe Zero. So basically, Ayambe Zero, what we are doing is to solve the issue of climate change. And the biggest issue we're solving is the lack of climate finance on the continent and developed or rather less climate resilient countries. Now, when I mention climate finance, what I mean by that is that most of the issues affecting us at the moment require about 9.2 trillion US dollars every year for us to be able to mitigate the effects of climate change. But the challenge is that the poorest countries, all the developing countries, lack the critical infrastructure to actually mitigate these issues. The objective of what we are doing is that we've built a platform, basically software, where we are helping companies determine emissions across their use cases. If I asked you a question and said, how many glasses of water did you take today? You may tell me 1 or 2. If I told you how much carbon you emitted because of your activities throughout the day, you may probably tell me half a glass, or you may not even have an answer at all. So imagine you're a company. How much or how many of those glasses full of carbon would you actually emit? You may not have an answer, but basically that's what we are doing. we're basically helping companies determine emissions, or rather how much they're emitting across their various activities over a given period of time. And we build these tools, and we equally have developer tools as well. So if you're a developer and you feel you want to leverage some of our tools, you can definitely reach out to us and then sign up and have access. This will help you then customize and build your unique solutions around the world. In terms of climate finance, currently we have a pipeline, right, of various green projects we are going to finance, up to a tune of about 150 million US dollars. And these projects are basically located all around the world, from Latin America, in the US, Europe, and definitely on the continent of Africa, ranging in different industries, from construction, by that I mean green buildings, to clean energy, to clean transport. Some of them are really game-changing solutions, and our role is to be able to provide them with the necessary finance to be able to take off. As I mentioned, we are basically focused on Kigali at the moment. By that I mean the setup is in Kigali, but our work has been on a global scale. My urge, of course, for you today is to ask me as many questions as you can. Meet me around. I'm willing able to chat with you and figure out how we can be able to work together to basically be able to determine our emissions and provide climate finance to the necessary green projects available. Before I continue, I would love to pretty much get a question, one or two, audience, in case you have any clarity or you need more clarification of what I've mentioned at the moment. By show of hands. 3, 2. Any question at the moment?
Thank you for such a great presentation. I like what you're doing. I always see companies trying to reduce their carbon emissions. But maybe a quick example, how do you determine that? And probably for a company that is in fintech, what are we supposed to be watching out to reduce our emissions?
Interesting. So let me give you a quick example, right? So if let's say a company, each company, we're basically looking at it in 3 dimensions. And they're basically 3 categories, right? What we call scope 1, scope 2, and scope 3. So ideally, scope 1 emissions are those emissions that are derived from your direct activities. So if you're a fintech company, all transactions that you're making, each transaction is literally emitting a certain amount of carbon that you're not aware of. So that's your scope 1 emissions. Then we do have scope 2 emissions, and those are more or less like purchased, in quotes purchased, right? And that's like power and energy you're using, let's say, for your office space. So the energy you're using is basically also emitting a quantity of carbon, right? So that's what we call scope 2 emissions. Then we have scope 3. Now those are basically focused on your value chain or supply chain. This could be, if let's say you have partners, let's say folks at the roadside that you're dealing with to transact, right? Those are part of your value chain or supply chain. And what of course is well known is that scope 3 accounts for about 70% of these emissions. Now, what companies are pretty much doing at the moment, they're simply focusing on scope 1 and scope 2, forgetting the 70% of scope 3. Our role is to give you visibility on all those 3 aspects through our SaaS product. Yeah. Any other question?
So I'm trying to get a sense of why would a company, like what's the end value, like what's the value for the company that pays you, knowing this information? I know, maybe we are more climate conscious and we're trying to reduce, but in the sense, like, what is the end goal? Like, how does it fit into the profitability model and, something that is more incentivizing companies to pay you?
Good question. So, that question is pretty much about what incentivizes the companies to actually leverage or use our services, or rather go ahead to determine their emissions. Right now we're seeing about 5 to 7 different reasons. Of course, the first one is regulation. At the moment, we may not have any idea of what's happening, but different countries around the world are actually putting in place various regulation policies. If you look at the US, they have the US, Europe, of course, even other countries at the moment, even Rwanda, they're doing the same at the moment, Kenya and a couple of other countries. So pretty soon you're going to be asked to, in quotes, file your emissions, just like you're filing taxes, right? So that's one regulation. So without knowing how much you're emitting, there could be a fine. I'm just putting it out there for you, right? There could be a fine. So our role is to ensure they don't fine you, and our role is to ensure you stay safe, within the law. Of course, there's aspect of what you're seeing in terms of brand loyalty, especially from consumers. Right now, we're seeing a lot of very green conscious consumers. So if you have a very big brand, or you're building a brand, right, that you want to scale, you definitely want to have folks appreciate your brand, be part of your brand, and they want to expect you to basically share some of this information, right? So what we do have, we help companies create what we call a sustainability report, which you can be able to share with your audience, right, at any given moment in time. It could be a monthly report, a weekly report, or an annual report. This at least gives information to your brand or to your consumers in terms of where you're standing, what steps are you taking, and if they can actually continue buying from you. The other thing, as I mentioned, if you look at Scope 3, right, because it focuses on value chain, right now most of the logistics are pretty much messed up. But by being able to analyze the emissions in Scope 3 or in the value chain, you can be able to actually create more innovation or even reduce costs in your value chain. So we've seen companies where they can be able to move faster, reduce costs, and actually be even more competitive in the market. Of course, that bit small is about trust, also you have a reason about the board, right? So we are seeing companies have different boards mandating them to submit reports, right, about emissions. So we are seeing, let's say, a company. I'm going to give you an example, right? It could be, let's say, Starbucks. You'd find that the board would request the executive to submit a mandatory report about the emissions. The last one is, of course, risk in terms of being sued. I think even today I was reading an article. There is, especially insurance companies and banks, they're currently getting sued because they're financing heavy emitting industries. So you'd also want to avoid that risk of doing so. Even if you're emitting, at least having a sustainability report and showing how you're going to reduce could be a reason for you to justify what you're doing at the moment. Yeah, thank you. Okay. Arnold, how are you doing with time? Yeah.
Thank you so much. How do you work with only companies, or you also target individuals? And how do you plan to work with people in rural areas who ban charcoal big time? And yeah, I think those people really emit these, the things that you're trying to address. So how do you work with those people in rural areas, and do you work with individuals?
Good question. So definitely, of course, we also focus on individuals. The reason why we began with companies, realize that companies have a lot more activities going and basically taking place, therefore producing a little bit more emissions. But because we've been able to build different tools, our tools are definitely able to be used on an individual scale. But of course, we can't do everything, right? So that's why we decided to expose, or rather to distribute some of our tools to developers out there, right? I may not know the exact circumstances in your local scenario or in your rural area, but you may know, right? So if you use our developer tools, you may end up building your unique solution that can help the farmer to actually be able to know, how much they're emitting, right? Maybe you could build a solution that uses offline technology, right, to ensure the farmer or someone in the rural area can be able to use these tools. Oh, well, of course, if you're using developer tools, of course, the pricing model is basically API as a service. So it depends on the number of API calls you call. Now, this is a bit technical for developers, but we shall definitely be having different sessions for developers, definitely to give them more understanding of how our tools can be used. But that's to answer your question. Yeah, but individuals, we may not do it. We may instead focus on other people to actually build unique solutions for them. Yeah. My last thing maybe, we're also a partner with the Clinton Foundation. We've also been able to sign a couple of MOUs just this week to ensure we can be able to move our work forward. Our goal is to at least be able to provide about $7.4 billion in climate finance before 2030. Thank you very much for listening. Unless there's any other question, I would love to pass it on to Arnold. Arnold.
Thank you, Alex. Alex is so humble. Alex, my question, how much have you raised so far?
So we're doing $50 million. 50.
He casually dropped $50 million. Yeah, that's it. Hand clap for Alex. I don't think that hand clap is worth $50 million. Our next speaker is a guy who's trying to make sure that your technology is right. Ladies and gentlemen, let's put together our hands for Mr. Andrew Mutua.
Thank you. Thank you very much, Arnold. So as you've heard, my name is Andrew Mutua. I wouldn't actually count my company as a startup. We've been in operation for now a little over more than 5 years now. We started off in Nairobi in Kenya with 4 of my friends, and we were actually trying to fulfill a mission that we saw out in the market. How can companies be more productive? The CEO and chairman of Microsoft is said to have mentioned that all companies are now software companies. And that's true, and companies need to think and operate in a digital way. We now live in a new dispensation where a lot of our staff are distributed. Either they're on the road traveling, either they are working from home, or even operating from co-working spaces like this. So how do you ensure, as much as they are not in a same physical space, they can still operate as though they are in one? So our mission basically is to develop tools and digital virtual workspaces where staff can still be able to cooperate and work together as though they are in the same physical space. So how do we do this? We mostly leverage on Microsoft platforms. You probably might have heard of tools like Office 365, SharePoint, Dynamics 365, and others. So we build business applications on top of those tools. And these tools could do a myriad of functions. So whatever it might be it within the HR department, if you're looking to develop some kind of an appraisal performance management tool, we can come in and model those kind of tools for you to be able to do this digitally without having to require your staff or your employees to fill up paper-based forms, or without having to require a kind of physical engagement with someone, either to sign off on some documents. We also enable those kind of tools, digital signatures, e-signatures, such that you can approve various processes within your organization digitally. So our motto is basically enhancing productivity in the workplace. And we do that through those kind of tools, and we've worked with a number of organizations from across a number of verticals. So it could be within the financial services. So you're talking of banks and insurance organizations. We've also worked with companies and organizations in the automotive sector. We've worked with a number of organizations in the manufacturing sector. We've worked with international NGOs. And a number of other organizations. So we cut across the entire gamut. If you need our support, we are happy to come in and review your business processes to ensure they are efficient, that you're able to do more with less, that you're not constrained by distance, you're not constrained by whatever it might be. So we want to ensure you're effective regardless of this kind of constraints that we might have, mostly in relation to being in the same physical space and enabling you to be more of a digital company. So going back to that ethos of what Satya Nadella, the CEO and chairman of Microsoft, said, being a digital organization. So in a nutshell, that's alternate. I'm happy to hear if there are any questions from you. If I don't get one, I do have a question for some of you. So I think now I'll open it up for questions. I think the light is a little too much. Okay, I think there's one down there.
Hi, thanks for a great presentation. From what you just said to what Alternate does, is it a purely business-to-business endeavor, or you also work with small enterprises, as this region is mostly comprised of small enterprises and the startups and startup ecosystems? Sometimes they cannot afford those kinds of software suites when you talk about the likes of Microsoft Suite or Salesforce, all that kind of stuff, because sometimes it could be a great cost or cost-cutting initiative if you're able to find a way to incentivize working with small enterprises or other businesses that are not on the grade of like corporate level.
Okay, thanks a lot for that question. Yes, our portfolio has been primarily based of business-to-business engagements. These are typically enterprises, but our R&D division is actually building a platform that will cater for SMEs. So we will be able to build tools that are fairly affordable for small and medium-sized enterprises, companies, that will still be able to get the benefit of these digital tools that we provide to big organizations, the likes of banks and others. So thanks a lot. So yeah, that's something that has come up and we are looking into it. There's another question here. I think I'll give you my mic.
Hi, Andrew. Thank you very much for the great presentation. What I would like to know about Alternate, can you kindly tell us more of how did Alternate, which are some of the companies that they have worked with and where, and what was the reviews from your clients from whom you have worked with before and after you have worked with them? Thank you.
So thanks a lot. That's a very good question. We've worked with one construction company. Actually, it's doing works at the Bugesera airport. The name of a company is called Motor Ingel. It's a construction company. And it's a company that was processing a lot of documents. So you can imagine if you're a construction company, you're probably working with architects, you're working with developers, and a number of other roles. So it involves a lot of design documents. It involves a review of those documents as they implement. So they needed a system where they can be able to review design documents, approve them or possibly require them to be amended, and then store them, file them. And this process used to take quite an amount of time and effort. So it used to be a work that would involve spending about 4 to 5 hours just filing these documents. And we're able to cut down that process to about 20 minutes. So it's all about saving the limited resources that you have, be it time, be it resources, you spend, if you're processing a lot of forms, so you're spending time on paper, printing them, you're probably having to move from one point to another to have them approved. So this enables them to be done virtually now. It's good to see the likes of BRD are enabling tools like loan origination to be done all online. And those are the kind of tools that we provide organizations. So you don't have now to go to BRD, fill up a loan form, sign it, leave it there to be reviewed, come back after 2 or 3, 4 days before you're either given a yes or no. So those are some of the things, an example of the experience we had with one of our customers. So we cut down an effort that was taking 3 to 4 hours down to 20 minutes. And it's all about digitizing and automating those processes.
Thank you, Andrew. Thank you. Hand clap for Andrew, ladies and gentlemen. We just have 2 more speakers, and the DJ is setting up, and then we'll get into that. How many of us know about Ingomoko? By show of hands. So people at the back, you're going to be banished. People at the back, you're going to be banished. Please, could you control the noise? Thank you. Just 2 more speakers. Let's put our hands together from Julian Euler, the co-founder of Ingomoko.
Thank you, sir. So, I have to confess something. When I was invited to Founders Friday, I thought that I was actually being invited to DJ. But when I heard that I was supposed to give a talk about founding in Homoko, I was actually a little bit nervous. Because I don't think about myself as a founder. And I don't actually think about myself as an entrepreneur. So, for those of you who don't know me, my name is Julian Euler, and I am a co-founder of Inhomoko, and I am an entrepreneur, but I don't see myself that way. And for anyone who's started something, you might feel the same way, right? We're not necessarily our titles when we take the risk to be an entrepreneur. And in fact, what I would say that we are not founders or not entrepreneurs, but we're problem solvers, right? And so in Homoko, what we actually do is that we work with micro, small, and medium enterprises. We provide business development services and access to below-market debt financing. We started in Rwanda 10 years ago, and today, actually, some of my colleagues are in one of our locations in Kenya, where we are filming a profile of the 50,000th business we have ever worked with. And so now here we are, 10 years later, we've worked with 50,000 MSMEs across 19 program sites in 3 countries. Next week we're expanding to our fourth country. We started here in Kigali in many ways in rooms like this, with a bunch of other people who were problem solvers. And I think that's where I'm so happy to be here and to reflect on the journey of Inhomoko, and in many ways reflect on sort of the 3 pieces of advice that got us from that first year to now a decade later, right? And preview of coming attraction, right? I was scared on day 1, and I'm also scared today. because that is sort of that's the responsibility of someone who's committed to solving problems. And one of the lessons that I've learned very in-depthly as a problem solver myself and as someone who's worked with 50,000 problem solvers is that the first thing that we need to do, whether we're starting our own company or whether we're someone who's working to make change in a different company, is the first piece of advice is commit yourself to the problem you're trying to solve. Don't commit yourself to the solution you have today. Because when you commit to solving a problem, you approach it with curiosity and with humility. The Nhomoko today is very different than the Nhomoko of 10 years ago. 10 years ago, I remember sitting in the office with my colleagues, and our big, ambitious goal was to work with 100 MSMEs in our first year, and to do it in our second year and our third year. And today, in 2023, we're working with 19,000 MSMEs. And so if we had committed ourselves to our solution of working with 100 small businesses, we would be so much smaller than we are now. Right? So for those of you who are thinking about problem solving, for those of you who are thinking about doing it on your own or with your team or in an organization that you work for, that problem-solving mentality was something that helped us get to where we are today. The second thing was find a painkiller, not a vitamin. And as entrepreneurs, we get so invested in our solution and our product. And we talk to our friends. And we invite them out for drinks, and we talk to them at networking events, and we ask them hypothetical questions like, if we had this product, would you buy it? The number of products that I've said I would buy are like billions, right? The products that I actually buy are very few, right? So we have to find a way to invent painkillers. Because when you're asking me, in broke January and even broker February to buy something, it has to alleviate my pain point now, right? And the other thing that I've learned over the last 10 years is to do this work with values. Because at the end of the day, when you're home and you're by yourself and you're looking at yourself in the mirror, that's the biggest stakeholder that you have to account for and you have to be accountable to. And there are times in our past at Nhomoko where we've made some mistakes and we've decided to close programs. I mean, we had an office, our first expansion was in Tanzania, and we closed that down after 2 years because of a lot of missteps. But at the end of the day, it was our values that showed us the way when times were murky. Right? So if any of you are right now 2 or 3 years into your entrepreneurial journey, and you're like, I have no idea what to do, take 10 minutes and write down the values that keep you coming to work, the values that make you want to work on this particular problem. Right? And those are the things that are going to shine. Right? And today we're 10 years old, and we're opening up our 4th country next week. And it still gives me jitters, right? Because I still have to be the person to go out there to sell the vision. And to have that confidence is something that I would love to say, is something that gets easier over time. But it's still a reflection of us, right? It's still a reflection of the people who believe in this work and who do this work every day. And I remember on one of my very first pitch competitions where I talked about this big, bold idea. I talked about the change we were going to see in our communities. I talked about this solution we had. And I was no more than 2 minutes into my pitch. And this investor stopped me. And she said, Julian, we're not going to invest in Nhomoko, because we only invest in exceptional entrepreneurs, and you are not exceptional. And that is something that I continue to think about, not because of this person's assessment of me after 2 minutes, but I think about this person and just how wrong she was in doubting that when you have a great team, when you commit yourself to a problem, when you find a painkiller in your community, right, then magic can happen. And today, in Homoko is a team of 250 people. And not just 250 normal people, 250 exceptional people. 250 exceptional people who show up to work every day more deeply committed to someone who passed judgment on us after 2 minutes. So that's the last thing I would leave to you, entrepreneurs, people who are thinking about starting something, right? Is that just by taking that risk, you're already exceptional. And that your value as a person isn't tied to someone's poor judgment, right? Even if it's in Homoko's judgment. All right. So with that, I have like a half-drunk beer somewhere out there that I will be getting back to. But before I do that, I would love to take a few questions from the smiling faces in the audience.
Wow, congrats on 50,000. My gosh, that's amazing. Well done. So my first question is, you touched on values, like having values when you go into your business. Do you mind maybe sharing one of the values that has carried you through some of the hard times? I'm sure they were there. And then maybe also just touch on one of the challenges, one of the hardest challenges that you've had to overcome on your journey.
So thank you so much for that, and thank you for the recognition. We have 5 core values at Homoko, and one of those is purpose, another is achievement, improvement, bravery. And in many ways, values that are painted on the wall are nothing but words unless they're put into action. And my favorite value that we have is actually our 5th one. And that is one of, well, we say it in 2 different ways. The first way we say it is turakumwe. But what we paint on our wall is the phrase, "We eat goat." And in every one of our 17 offices in the 3 countries where we work, Rwanda, Kenya, and Ethiopia, in the office there are the words, "We eat goat." And that doesn't mean anything, right, to anybody else. It doesn't mean anything to an investor. It doesn't mean anything to someone who's like looking through our audited financials. But what it means to us is 2 things. One, we celebrate success. And that doesn't mean we celebrate the 50,000th success. It means we celebrate Doreen when she gives her first investment, or when we celebrate Patrice who's worked with his first client, right? We celebrate milestones. And what it also means we eat goat is that we hold each other up in hard times. Right. And so for all of us who experienced COVID and how scary it was, not knowing if we would have a job 2 months later, or not knowing how COVID would change our organizations, right? At Homoko, we ate goat together. And we did it virtually. And we held each other up in hard times because that spirit of togetherness really exemplifies that this work is too hard to do alone. And we are putting forth such commitment and effort and passion into this work, and we need that togetherness to go forward. And that, right, is something that happened right in some of our biggest challenges. When we opened an office in Kenya, our very first office on our very first day, the very first employee that we had was taken to jail. And he was taken to jail by doing legitimate work on behalf of the organization. But people in the community thought that he was sketchy. And so he was taken to jail. And so that togetherness actually showed us what to do when we were in a new location, when we didn't have all of the connections, but we knew that we needed to stay together for someone who could continue to do work for us. So we have so many challenges. I think we've had 50,000 successes and about 100,000 challenges. But that spirit of togetherness, holding each other up in hard times, celebrating the successes, is something that has 100% gotten us through the last 10 years. Thank you for that question. Any others out there? Questions?
Yeah, I have the mic. So my question is, you've quite grown as an organization, and congrats to you and your team on that. I wonder how the organization has evolved to be able to handle that scale, 250 staff in 4 locations, in different localities which have their own challenges. How have you been able to manage that, and how has the organization grown to now be able to scale up so fast? So thanks.
Thank you for that. And Arnold, if there are any other questions, I can take a couple at a time.
Bob, you have a question? No, sorry.
Hello, thank you, Julie. So my question is really about strategy. Many young entrepreneurs struggle starting up, and I would like to ask you if the strategy that you curated when you were coming in is still the same that you're maintaining, and if you have had to edit it over time to suit these challenging business environments, and what the challenges have been, 1. And 2, also, I was discussing with a friend who did not entirely understand the difference between a plan and a strategy. So please help us. Let's learn from you. Thank you.
Thank you. Do we have one for the road? Sure. Here.
Thank you very much. Thank you, Julian. I'm glad to be here. I'm probably one of the few people who have known you for the past 10 years, and I really appreciate what you do. So my question today is, what is the most impactful service that you really think has made Ihomoko what it is today? Thank you very much.
Thank you very much. Julie, we'll take those 3.
Yep, thank you so much. So I'm going to answer all 3 of these questions in a little bit of a roundabout way. The first thing is, every year at Ihomoko we have a theme, right? And so the theme this year is what has gotten us to today has been great, but what's getting us to tomorrow is insufficient. And that's the question of, we've been an organization that has been a reflection a little bit on one of our co-founders, that's me. I'm much more of a people person, a culture person, a programs person. I am not a systems person. And we have grown because of grit. But that is insufficient to us going to scale. And so when we think about getting to 250 staff, that has been based on an incredible amount of hard work, values, culture, opportunities. And I would argue that being opportunistic is a strategy. But we have to hire, and Ihomoko is hiring 200 more people in 2023. Right? So we're at this point where we're still almost doubling. And that is when systems will turn a good organization into a great one. And that's really the work that we need to do now, is to how do we institutionalize us going forward. And some of the challenges that we've had is because we maybe haven't been able to go as fast as we wanted because we've had some clunky systems. But honestly, I remember people telling me this advice when we were 2 years in, when we were 5 years in. And they're like, you have to invest in a system. You have to have lawyers. And I'm like, dude, I can't pay for that. Like, I'm just hustling. Like, I can't stop the work right now to invest in a system that's going to help me go to scale, right? That we put on all of our pitch decks. So part of it is also knowing, like leaning into the strengths that you have, and leaning into the places where then you can, that will get you to a point where then you can pause, you have resources, then you can do that work. And so for me as a leader, I'm all about that strength finders for ourselves as individuals, but also for us as organizations. I think maybe my systems people might be pushing back on exactly what I said, but they don't have the mic. But in terms of like, did we think that we were going to be here when we started 10 years ago? Yes and no. All right, our PowerPoint deck today looks different than our PowerPoint deck 10 years ago, but the values of the organization and the framework of what we're doing is still the same. It very much is. And one of my favorite quotes is the Mike Tyson quote that everybody has a plan until you get punched in the face. Right? And it's that value that once you get punched in the face, that's going to help you get to recover. And another quote by somebody, I don't know, it's one of those they said, whoever they, the internet is that culture eats strategy for breakfast. And for us, we've had a lot of strategies, right? These are that sort of medium-term view. What are the things, the bigger things that we're going to change? Are we expanding into country A or expanding into country B? And those are things that like help us get to where we're going. But, when COVID happened, the only thing relevant of our strategic plan that we spent money on consultants, that we spent time with our board of directors, the only thing relevant of our 3-year strategic plan that started January 2020, by March of 2020, the only thing relevant was the cover page, right? And it's the culture, right? It's the culture and the values that helped us see through this really murky time. And so in some ways, what I see is the greatest service that we offer. And in Homoco, we offer trainings, we offer financial management planning, we offer direct investments. And for any of you who have participated in Homoco services, you can tell me what's been most effective to us. But as a leader, what I think is our greatest service is believing in people and giving them the tools to succeed, right? And as long as we have that approach, giving you the tools to succeed and the belief that you can, whether that's helping someone who's illiterate figure out how to keep financial records, if it's giving someone debt financing when you don't have collateral, right? If we can continue to offer those services, right? The belief, the tools to succeed and the belief that you can, we will always stay relevant. Whether we're offering operations training or equity financing, or we change and pivot and we offer, human resources management, right? And so those are the things that get me excited. So thank you for those questions.
Thank you, Julian. A hand clap for Julian. Guys, 500,000 customers, 500,000 services. Before we go to our last speaker, I just want to ask you, do you know the person to your left? Do you know the person to your left?